Chris, welcome aboard. Happy hump day to you guys. Wednesday morning, April 27th, 2011. Happy Fed Day, I should say. Here's your live time recap. Now, Wednesday morning, right, this was the day we've been waiting for all week. In fact, if you ask me, this might have been the day we've been waiting for since the, 17th, 18th of March, right? Quadruple witching. Ever since the third week of March, we've had these narrow price ranges. And we've kind of been scratching our head going, where's the volume at, right? Where'd all the volume go? Usually it takes about a week or so going into that 1st of April to kind of get things back on track. Well, here we are, right? The 25th, 26th, 27th. And we're hoping now that this brand new Fed Day format is now going to get all the jitters out of the way, right? Because remember, traders are creatures of habit. And if I'm a major money manager and we have a brand new FOMC day format, I'm going to be very careful before committing any of my client funds for that. So a lot of the major money managers out there, we have to assume, have been waiting to see just to make sure everything went okay with this today. And of course, we'll talk more about how it ended up tomorrow in our live trade room. But this morning at 7:45, we knew it was Wednesday. And we knew for this Wednesday, it was Wacky Wednesday. It was crude inventories at 10:30. Right, on Wednesdays, and we have the Fed Day, not sure what to expect. Now, one side of the coin says Fed Day, crude inventories, lots of news, lots of volume, lots of trades. But the other side of the coin says something's different today, and most traders will treat that as a reason to sit on their hands, right, and wait to make sure this day goes by okay. So we really didn't know what to expect. And it was amazing because this morning at 8 o'clock, right, I caught myself, and this is something where we have to always make sure we don't do this, right? If you don't expect too much, you still have to be prepared. Okay, this is something that I learned a long time ago as a new trader. If for some reason I didn't expect very much in the market that day, maybe it's Fed Day, maybe we're expecting a holiday weekend coming up, whatever the reason is, we always know when we might have a slow day. And today we were expected that today could have been a slow day. It wasn't, but we thought it might be. And so you've got to be very careful if you don't expect very much not to be unprepared. See, this morning at 10 o'clock on gold, we got caught off guard because we weren't expecting very much. We weren't prepared for it. And it kind of woke us up a little bit, and we reminded ourselves, whoa, right? Even though we're not expecting much today, we've got to be ready for whatever this market throws at us. Because soon after that, we got just a ton of opportunity here. Now, so very slow at the open, okay? Very slow at the open. We were expecting that. And that was where, I'll admit, right, we got a little bit lazy. Now, we finished our morning prep, but we really didn't, right? We really didn't get into the, if price rises, do this, if price falls, does that. All of a sudden now, right, we see price start moving. And we say, yikes, we're not expecting this. So, of course, we stop what we're doing. We make sure we're ready for our plan of attack. So be sure, don't fall victim to that same thing on your own time. All right, guys, learn from the mistake that I made this morning. Now, at 9 o'clock, gold finally breaks above the previous high of day. Now, we had a very similar market on gold and crude. Both had a wedge and both had a sideways range. Now, gold, once it broke above that sideways range, it was above the previous high of day. The previous high of day, we're going to start buying pullbacks. So at 9 o'clock on gold, right, new higher highs, buy pullback 1, buy pullback 2. On the second pullback, the second wave pattern fails. So we see it go +5, +10, and then it curls over and dies. So at 9 o'clock, we start buying pullbacks, but by 10 o'clock, we start seeing these highs are failing. 10 o'clock, big drop, right? And that was one that caught us off guard. We weren't expecting this big drop. Bottom falls out of it at 10 o'clock, and crude starts to drop. Gold drops. Now, we had been above the high of day, or above the previous highs on gold, and then when we dropped, we came below the previous high of day. That means the sellers are now in control. And then we broke below the wedge. So we sold the highs, we sold the wedge highs, and we took $300 out of the market. So 9 o'clock, we're buying pullbacks, right? By 10 o'clock on gold, gold's dropping off those highs. We're now selling, of course, the break below the highs, and of course, the break below the highs of the wedge. Now, that was pretty much all we got out of gold today. Right? Couple winners to the upside, right? Sold the big drop back down, right? That was it. Made some pretty good money on gold. The big winners, though, came on crude today. In fact, we had one of our biggest winners of the year today on crude. Now, at 10:15, what were we looking at? right? 10:15 rolls around. What's going on? We've got 15 minutes now to what? The inventory number. And we had spent, what, half an hour this morning talking about our news this morning. And we said, all right, if we get after 10 o'clock, we've got to be really careful on crude. Okay, so we know we had 10:30 news on crude, but we also know that the old 5 minutes before and 5 minutes after really doesn't apply on crude for the crude inventories. So we know on Wednesdays, inventories are at 10:30. We really got to be careful right after 10:15. All right, then it's going to really start getting sloppy. Right, really for the most part though, after 10 o'clock, right, that's going to be the tough part. So, and of course what happens? 10 o'clock rolls around and crude tumbles. And we're going, what? Because 7 o'clock, nothing going on. 8 o'clock, nothing going on. 9 o'clock, nothing going on. 10 o'clock, right now, I've been waiting 3 hours for crude to move. And right when my alarm goes off at 10 o'clock, what do you think happens? Crude moves, right? And we go, what? Are you serious? It goes nowhere for 3 hours. And then once I can't take the trade, it then drops. And we say, all right, well, not much to do about this. So crude drops. We hit a trend line support, which we had defined earlier this morning, and we bought the support and brought it right back up. Right? Now, by that time, it had now come in after 10:30. So at 10 o'clock, crude drops. Right? We're pulling our hair out because we're saying, where was this an hour ago? But of course, it's 10 o'clock, 10:15, 10:30. I'm going to wait until after that 10:30 news comes out. 10:30 news comes out on crude. Inventories are skyrocketing. Right? Now, we really didn't have time to even look at the news report because right away we saw what? Buyers into the market. Now, meanwhile, crude had already dropped. And as frustrating as it was, I didn't even touch the move down because we knew it would be sloppy going to 10:30 news. 10:35 rolls around, now we're talking, right? Green light, buy those lows, bam, right? $500 winner. So we take 20, 30 ticks at 10 o'clock, buying the lows. Then at 10:35, we get one more chance here, a 50 tick winner. Now we're up off those lows on crude. By 11:30 on crude, we're now going back into that wedge, which we had just dropped below of. We bought the lows of the wedge and we took a +5, +10, +55. That's an 80 tick winner, $800 at 11:30. And then, as you can guess, once we finished taking our profit all the way back at the highs, you know what I did, right? I sold those highs, right? We swatted those highs back down. Very sloppy though at 12 o'clock because 12:30, right, was the announcement. So we knew we were kind of burning the candle on both ends here, but we kept seeing good price action. So we kept trading. I will keep trading until the market tells me to stop, right? Fear is not an exit strategy. The market tells me what to do next. So by 11:30, we're now buying the lows of the wedge. By 12 o'clock, we're now at the highs of the wedge, and you know what we're going to do? We're going to sell the highs. Took one swing at it, +5, +10, bounced me out. Took another swing at it, +5, +10, bounced me out. Very, very sloppy at 12 o'clock. So I take two more trades on the crude, finish up our day at 12 o'clock, and boy, what a huge day. So we had a feeling, because we saw the failure here at these lows, we had a feeling here that this thing was going to jump. We tried once, it failed. Tried the second time, this time around, 10:45, 6 times 2 is 12, +11, right, is 23, +24 is 47. So we take 47 ticks out of this trade buying the lows. But now we know we're going back up to that wedge here. And we've got lots of speed now. So of course we buy the lows, right? 47 ticks there. We're going to keep rising, lots of speed, higher highs here. I'm going to buy a pullback. Now I bought this pullback knowing that if we did break up here, we're going all the way now to the top of this wedge, right? We bought that pullback knowing that the sellers failed. We always talk about the fact that the most important information probably happened 10 minutes ago. So think about what happened 10 minutes ago. We saw inventories come out and the sellers failed. When those sellers fail, we then bought those lows. But now, knowing those sellers failed before gives me even more confidence now, buy a pullback and try to get this thing into the wedge above you. Now when that happens, now it's off to the races. We'll go from lows of the wedge up to the highs of the wedge. And this was one of the biggest trades of the year so far. 11:30, okay, so an hour after we saw the sellers fail, we get our plus 5, plus 10, and then plus 61. That's an 81 tick winner, an $800 winner there. So we took 47 ticks out of the market, $470 buying those lows, another $810 entering the lows of the wedge, and now here we are now at the highs. I'm going to sell these highs. There's one try, there's two tries. Now we had seen double bottoms on crude, and double bottoms told me on crude, I want to sell these highs right now. And we actually took about 2 hours in training today to talk about how to use these patterns in the highest percentage environment. So we had double bottoms earlier today, and that double bottom told me as soon as price came up to the high of day again, I've got to try and sell these highs. We just took 80 and 47 ticks out of the market. Now here we are at the highs, and you know what I'm looking for, right? If we go back into this wedge again, why not sell the highs of the wedge again? And that's what I try to do.